Hi everyone, this is Mike Kramer of Mott Capital. Today is January 15th. It's around 3:15 New York time. So today is one of those days where the rest of the world was open and US markets were closed. I always feel like these type of days can sometimes give us a little bit of insight in terms of what the rest of the world is thinking about when it comes to some of these markets and currencies and pairs. Today, actually, I thought we would start off with oil because I think there's a lot of things going on in the world, specifically in the Middle East, especially with the Red Sea now, where we're starting to see some potential pressures building on global trade. And of course, oil prices are an interesting spot because this was the low that's been kind of in place now. It's going back since almost a year. And it's an interesting spot for a couple of reasons. Number one, this is clearly an important level of support. And it's also at the very low end of the range, and you have to think that we're going to be getting to a point in time where, again, oil prices will no longer be a headwind to inflation, and that could be another sort of inflection point as well from different perspectives. But this is a really, I think, important spot for oil, just because this has been the level that's held now for going back for almost a year. This $67 spot. This has been the level that's been tested again just recently. It got down here to around 68 and a quarter or so, 69. And now we're starting to see oil prices trend a little bit higher. And also what's noticeable here is that you have a little bit of a rising RSI. And so what I find interesting here, I guess, is that if you notice here, we had a low and a lower low on the price and the RSI. And here we had a slightly higher low and a slightly higher low on the RSI. And so while it's not necessarily telling us that there's a bullish divergence forming in the price of oil, so to speak, what it is kind of showing to us is that potentially there is some momentum shifts beginning to change, because when you get a price that, when you get an RSI that comes down to a low and it makes a higher low, and when you get a price that comes down to a low but makes again a higher low, if this would potentially suggest that maybe we're starting to see some sort of bottoming process in oil. And I guess as long as we hold this $67 to $68 region of support, I think that that's the message we're starting to get here from oil. Now, obviously, if we were to see oil break this short-term uptrend here, possibly around $70 a barrel, and then, of course, we would have to see if oil were to hold. But at least based off of the short-term trends in momentum, it would tell us that maybe there's a shot here that oil prices start moving up again. And I mean, we would certainly think that given some of the turmoil in the world, that oil prices should be moving up. And if they don't start moving up, what is the message that it's telling us about global growth overall and global energy usage? Because again, it looks like we're forming some sort of triangle. There was clearly a downtrend here in place, and that broke to the upside, and you can say that we came back and retested it, and to this point we've held. So we're going to want to see what oil does here. The short-term upside resistance probably somewhere around 74.5 to 75. Downside support somewhere around 70 to 71. Clearly a breakout above 75 leads to a move back towards 78, 79, while a break down below 70 leads to a level around 67. But again, I think the bias right now is for oil to move higher. When we swing over to currencies, the dollar always plays an important part of oil, and so again, it's worth taking a look at where the dollar is versus some other currencies. At least when we look at the euro continues to kind of just meander here around this 109, 110 area. When we look closer in at the 15-minute chart, you can see that there's just this in this 109 to 109 and a half region. This is obviously the level that has to hold if you're looking for the euro to rise, and it looks like your short-term support resistance is somewhere right here around 110. And at least when we look at the daily chart again, you can see that it looks like momentum is really starting to break to the downside. We did break this uptrend. We are kind of just grinding sideways at this point with a lower momentum signal. So a break here of this 109 area in the euro sets up a drop to around 108 and a half, while we have some pretty firm resistance at 110 with a move above that level, potentially sending it back up to 111. But again, at least over the short term, it looks like momentum favors a move to the downside. We'll look at the pound, a very similar look. You have momentum clearly moving lower. When we look at it also from a momentum basis on the RSI, we can also see that this has been a level of support. Clearly, a break of the 50 level on the RSI would be a negative indicator that momentum is likely accelerating to the downside, and we're seeing further weakening in the pound. At least for the short term here, it looks like the momentum is also set up to potentially lead to lower levels on the pound versus a dollar. Here's our big uptrend here. If we just kind of reset it a little bit, because again, these things aren't exact when we change the timescales, but we can see that this is a big level right here. This is the trend line that matters the most. This is clearly a level of resistance in this area around 127, 128. And so if we break this level here at 127, it sets up a move between 126 and a half and 127. Clearly, though, there's a very strong resistance up here at 127 and a half to 128. It's sort of splitting hairs, but this is a big level, because if you get above this 120, if you get above this 127 area, you're talking about something more significant back to the upside. While if you break this down area, I think more importantly, it confirms that momentum is broken and that you're going to see lower levels on the pound, potentially quite a decent size retracement. When we look at the yen, we're also seeing that momentum breaking to the upside, again, signaling stronger dollar. Here you can see that taking place. When we look at it again on the intraday charts, here's your uptrend that's now formed in the yen. And when we look at it on an hourly scale, here you can also see that uptrend. It looks like we tried to break below it and we came back up to it. So what this is telling us is actually a slightly different story, and we're going to have to want to see what exactly is going to take place from here. Clearly, if we continue to move up above this 145.75 area, I think we'll probably take out this high at 146 and a quarter and continue to move up, right? Because this 146 and a quarter to 146 and a half area is a resistance level, with the next level being 147 and a half. Likewise, if we fail here, you're going to probably come back and test this area. But again, it looks like momentum is starting to shift. You're seeing at least signs of momentum shifting in the yen. And if we were to see the yen break out above this 145 and a half to 146 area, which I think given the rise in the RSI favors, I think that likely means we're going to see it get back to 147 and a half to maybe even 149 and a half in the not too distant future. When we go on and look at markets, the DAX was open today. What I noticed on the DAX, which I thought was kind of interesting, is that number one, you have this this trend line that's here. If you connect this line to this line, it served as support here. So you have 3 points where it served as support, which would be important because that comes around 16,600. We can see that there's 2 points right now that suggest a downtrend. We would want to see if there's actually a trend here by it holding for a third time, somewhere around 16,765. Likewise, when we look at the momentum, clearly extremely overbought. You can see momentum is fading, but we haven't really broken a level of support yet in momentum that I think is critical in terms of actually seeing a momentum shift in the DAX, which it comes at this 53 region. I think if this 53 area falls on the DAX, it's going to probably tell us that momentum is starting to really weaken now, and we're going to start seeing a DAX move lower. I mean, there was some economic data today that suggested, Germany's GDP contracted in the most recent quarter, but yet the DAX trades at an all-time high or very close to one at least. And that's sort of an interesting caveat given the weakness of the German economy from a fundamental basis. But clearly the indexes overall have been much harder to dissect than just by looking at momentum gauges. And so what we need to be mindful of here with the DAX, much more so than I think on some of the currencies, and what I think is important right now for the DAX is that this could very well be a consolidation through time, or it could be that we haven't really seen the breakdown in the DAX yet. Again, there is clearly an uptrend in the DAX. We can see there is consolidation taking place. We haven't really seen momentum signal that a breakdown in momentum is occurring, more so that we're just consolidating right now at least. And we have to be mindful that a breakout above this 16,760 area could easily lead back to a move of around back to the highs at 16,950, which is a level that's now been tested 2 times and so far has failed 2 times. It used to be the case that the DAX traded somewhat with the euro, and it looks like that still is the case. So the euro may give us a little bit of a clue that where the DAX is going to be heading overall, but we can see that it's not a perfect indicator. It's given us some false signals in the past. So I would still think that using the euro as a gauge in terms of trying to figure out where the DAX is going to go, I think overall in percentage terms seems to work, but I think one needs to be mindful that there has been some deviations in the path more recently. So I think the DAX right now, this very much could also be what you would call a bull flag that's forming in the DAX as well when you look at it more from this standpoint. If you take out the euro, if you take that out from there and then you swing this down this way, you can certainly also make a case that the DAX is making a bull flag, right? Which would clearly, again, mean that a breakout above this 16,700 area could lead to a very sizable increase in the index. So I think right now you have to be very cautious with the DAX. You need some more clues. I don't really think that we have enough of them yet. We've just sort of been consolidating around the 10-day EMA, and that's really just, again, not giving us enough information. So right now, I think you just have to watch these levels, and I think you have to watch clues from the RSI and the euro. When we move over to the U.S. And we look at the Dow, the Dow is also similarly coming off of overbought levels. The Dow hasn't seen as much momentum loss as the DAX has seen. We're still up here in the upper 60s. We can also see that the Dow also is still hovering just barely above and still using the 10-day exponential moving average as support as well. And like the DAX, we have just been consolidating sideways now for some time. This remains, a critical spot because, we are trading at just about an all-time high. You can see this 37,777 level has been a tough spot for the Dow now on a couple of occasions. So a break above this level obviously opens the door to significantly more upside, while we have what looks to be some support in this 37,300 area, which has been the key level on the downside. So again, we're sort of just in a consolidation phase, and that means that I think you just need to be mindful of the upside risk here and the downside risk here. One other thing that is noticeable here is that there is an uptrend that is in place. So I would think that a break of 37,550 increases the odds that we come back down and test this level, while staying above this trend line increases the odds of us retesting the 37,785 level. And finally, when we look at the NASDAQ, essentially refilled the gap from last week. This has been a level that's also offering some decent resistance for the NASDAQ. Again, momentum is still fairly strong. We came down to around this 50 spot, and at least it bounced. It's really too soon to tell whether or not there is a meaningful change in momentum happening. We could just be merely, consolidating at this point to the side. And this is why I think, again, like the Dow and like the DAX, these are just much tougher reads at this exact moment in time. Momentum has clearly been to the upside, so one needs to be considerate of that and the risks that come with that. Meanwhile, you can see there is also an uptrend in the NASDAQ off of the lows from January 5th. So a break of this obviously sets up a potential retest of the 16,650. While as long as we stay above this uptrend and we get back above these highs right here from Wednesday and Thursday, which comes at 16,850, you're going to look like you're going to probably move back up to 16,950. And I think that's really where we are at this point in time. Anyway, I hope this helped, and we'll be talking to you later in the week. Bye.